All right, checkity check. All right, we are live. Let's roll. All right, good evening, everyone. Hope everyone is having a good time. Good morning if you're overseas and over in London time. We are definitely seeing some very interesting price movement this past few hours. And let's go ahead and take a look at what we can for this week. We'll do some prep for the week, get a sense of where we think the weekly draw on liquidity is, point that out, and then we'll go from there. So let's get started. So first things first, we want to take a look at the economic calendar. Monday, we've got 10 a.m. new home sales. We'll see a little bit of volatility there. Tuesday, CB consumer conference or confidence and a whole bunch of FOMC speakers. I imagine that will let us consolidate a little bit. Wednesday, preliminary GDP at 8:30 a.m. And Thursday, unemployment claims again. We saw what happened at the last unemployment claims, so you know how much volatility is there. And then, of course, Friday, we've got ISM manufacturing as well as Fed Powell speaking. So that will not be a fun time. Algos will have full control at that time, but we will continue nevertheless. So let's talk and see what's going on today with the charts. We'll start with the monthly and go down from there. So we'll do overall prep. So it's going to look a little bit messy here on the monthly chart, but just keep in mind if you're new here, I'll try to point these out, but these red lines are monthly levels here. These thick red lines are quarterly levels. These yellow lines are weekly levels denoted by the 1 week. And then you'll see these purple lines are daily levels denoted by 1 day. So just keep these in mind. You'll draw your eyes to the big red lines on the monthly and you should be fine. So what we're looking at right now on the monthly is we see that in this month of November, we've risen all the way up to none other than this 3-month and monthly rejection block. Kirk, how you doing, brother? Good to see you. Good to have you here, man. How have you been? Hope your weekend was good. Good to have you. So yep, we are looking at this monthly level here. We rejected from this. This is a rejection block for a reason here, right? So we went up to, if we take a Fibonacci here. Oops, that's the wrong one. I think this is Fibonacci, yeah. I had to remember my keystrokes there. So we can kind of see how, and let me make this into a simpler one of mine. So we see how we came up to 50% of this wick and then rejected from there, while also being treated as a 3-month and 1-month rejection block. So what do I think is going to happen at the end of this month? Well, I do think the month is going to still end green, and we'll take a look and see a little bit in some of the lower time frames to see how this plays out. So just keep in mind that we have this big red line here as a monthly rejection block, and that we only went to 50% of this wick. So from a monthly perspective, I think that we're going to leave quite a bit of movement down below here to head down towards. So we'll see if we head there. So let's go down to the weekly next. On the weekly, we do see on the long time frame that while there is a weekly imbalance that's way up here, we would need a large push to head up that way. We'd have to actually get through a lower time frame daily inversion fair value gap down here, and then head even above that through a 3-month rejection block. So I don't think we're going to get there, but where does that leave us then, you know? Well, let's take a look at this most recent swing here. So we have this swing. We came into a huge premium of this swing, but we did not take out this swing high. So the question is okay, well, will we take this out? Well, if we are taking a look at S&P in the same vein, we can kind of see on S&P, we failed to take out this high, but we also went into this rejection block as well. So The question is do we end up taking this short-term high out on both of these charts, or do we leave it open, fail to take that high, and then head down lower where there is existing liquidity right this moment? So my initial thoughts are that we took this key level, and let's take a look at the weekly imbalance here that we have. So the question now is, hey, we are in a huge premium right now, and if we took the low to the high of this swing and try to gain an idea, let's use the bodies of these candles for the time being because we know where those have closed. So we know that the midpoint is somewhere around here. You can't see that very easily because of how much other stuff there is on the lower time frame, but we're well above the midpoint. That's something that we can all agree on. So where could this weekly next weekly candle head to? So right now, remember, we took out this 3-month and 1-month rejection block, and then we also took out this weekly. There's a weekly rejection block right here that we rejected from as well. We haven't formed a lower low, so I do think that this would be a short-term retracement if at that. But what do we see here? Well, we didn't have this before, but now we do, right? We have this low of 15,837.50. So let's mark that on our charts as a weekly level, a weekly draw on liquidity, which we could head down to, right? And likewise, we'll have this candle's high, 15,616.25. Actually, let me put a weekly level here first. Okay. We'll call that a weekly premium BISI, buy side imbalance, sell side inefficiency. And we can call that a weekly premium BISI high. And of course, this is 15,616.25. So let's mark that on our charts as well. And we'll also make sure that that's on our charts here so that we have that value written out and referenceable on our lower time frame charts. So keep in mind, if you're new here, these charts will look busy and for good reason, right? Like, you know, we can see this on our higher time frame charts, but we can't see it. We can't see it as much on our higher time frame charts, but when we get down to lower time frame, it'll make all the difference. So, with this one, I actually might remove this for now because this mitigation block only shows up on a lower time frame, a higher time frame daily. Ultra, damn, that's a messy chart. I know. But stay with me for a moment and wait till we get down to the lower time frames, because that's really what the magic happens, right? So wait for me and let me get down to the hourly time frames, 15-minute time frames, and then those time frames where you're actually going to execute on, and this will make so much more sense here. So for the time being, just note for that we're on a weekly level, so pay attention to these yellow lines. That's what I want to draw your attention to. Okay? So, what else do we have down here? Let me remove some of these for the time being. I actually can remove this as well. We've already passed through a lot of these on the lower time frames, but I'll keep them here. So, so we just marked that we have this buy side imbalance, which formed just this past week, right? So we know that price is likely or could potentially draw here. What is also there is we have this previous short-term high, so that could help us draw down there as well. We have this previous rejection block or candle close high, which is right at that midpoint here. We could draw down there as well. So let's do one thing and mark out the midpoint from here to here, and let's give us a weekly midpoint to aim for if price were to come all the way down here as well. Why do we want to keep that midpoint? Well, it's a similar consideration with premium and discount, with equilibrium being halfway. We also want to refer to this point as a halfway point, so we'll keep that there. Entree, yeah, I completely understand. That was just, oh yeah, I love it. No, I you know what? There's gonna be everyone's going to chart differently. I know Hydra, I don't know if you're ever seeing this, Hydra, but thank you so much for putting some people on me. I really appreciate that. But there's going to be a lot of people that have this being quite messy, and I promise you it will make sense, though. So from a weekly draw perspective, let's see, Ultra consequent encroachment of that new FVG is probably going to be a good magnet for the week. Yes. We've gone too many weeks where it's rocketed to the upside, but S&P 500 is really close to a short-term high. We'll put these charts right next to each other in a moment, but for the time being, we'll finish charting micro Nasdaq first. So I do believe that this will be our core draw on liquidity, considering that we just took out a monthly and a 3-monthly rejection block, and we rejected from there greatly. So let's on the weekly, we do have some ones lower down here that are sell side imbalances here, but we'll take a look at those when we need to. All right, for this Monday's preparation and this week's preparation, this is what we're eyeing for. So let's go down into the daily next. Okay, so similarly on the daily, let me zoom out first so we can have the whole picture, right? So we are roughly over here. We did not take out this short-term high, which is a 3-month short-term high. We did fall within this monthly sell-side imbalance. So let's zoom in and see what that looks like, okay? So remember, this is the monthly sell-side imbalance, which we fell in between, and we did not close above that once more. So what does that mean? Well, we would need a fairly large push for us to consider moving even up higher. Is it impossible? Absolutely not. Absolutely not. So we can kind of see how we've built this consolidation range right here, right? Now we have this little consolidation range here too, but we see the bodies of the candles are currently creating something around this segment of price. We also see this consolidation, very rough items here, this consolidation here, this consolidation here, and so on and so forth. This consolidation down here. So if anyone has studied the market maker sell model, you gotta get a gist of as to like what I'm looking for right this moment. I see that we completed this buy model, this and over here, you kind of see how there's this consolidation range, this consolidation range. Gosh, there's been a few where we bounced up and down, but that being said, we can kind of see how we've made our way down, right? And now we made our way back up. So that's what I'm kind of looking for, is making our way back down. I haven't seen immediately like a true market structure shift lower just yet on the higher time frames, but that's what we're going to keep our eyes out for this week. Let's see if we see evidence of that this week. Okay. So let's take a look at the daily a little bit closer. Remember, these daily lines are these purple lines that we see here. This daily inversion fair value gap is one that's way further out west, and we're not going to consider that until we get above this short-term high here, if we get above it, right? So let's take a look. You see the weekly levels that we put up here. We see those are weekly draws on liquidity, so we're seeing that on a slightly lower time frame, the daily. We're on a daily time frame right now. 1440 minutes is a daily. And what do we see? Well, we see that we've begun the week and we've started to trade downwards. In fact, there hasn't been even a move above last week's close. There has been not one move above that. There's been a tiny little blip above the opening price, and we've dropped since then, taking out these area lows, and we're soon to be taking out a lower time frame sell side liquidity here. Now, this will make sense when we go to the hourly, because that's where we noticed this area of liquidity. There's actually relative equal lows on a lower time frame, on an hourly time frame here. So we'll be able to see that shortly. We're not going to trade it. We knew that was a draw on liquidity, but that will be important once we get to the hourly. Altre, I'm glad YouTube's algorithm finally recommended an ICT trader who trades micros. Going to be sticking to your... Oh, Altre, thank you very much. Yeah. Yeah, I love micros. I think it's the right way to build these small prop accounts. And yep, absolutely. Very tiny gap. Nevertheless, a gap, new week opening gap here. For those that aren't familiar with that, I'll point this out when we get to the smaller time frames. But this is a new week opening gap for this week, and I'll keep that in reference. So on the daily, we don't see very many fair value gaps here. We do see a prior week's new week opening gap. This is going to be an important first draw on liquidity here. What else is there? Well, there's a bullish order block here. So we'll have to see if we respect this and continue higher, because what haven't we formed yet? We still, to this day, have not formed a lower short-term low. This is the last short-term low that we've completed, right? Down here, this is the previous one below that. So we've created nothing but higher lows, higher highs, higher highs, higher lows, higher highs, and we still are waiting to see if we can get down below this short-term low on the daily chart. So if we can get down below that and close, I would look for a continuation or a retracement back to this new week opening gap. This old new week opening gap. We'd have to trade through it first, right? Look for us to trade back up to it, reject, and head down towards these areas down here for this week. Lots of people are super bullish still. They're saying that, like, oh, the market's fine now. People are getting used to the rates. I don't think so, but let's see, right? Let's see what happens. We have to close below this short-term low before we get anywhere, though. So what does that mean for Monday? Well, we're starting off pretty heavily this Monday, and we have these previous day lows to look out for in this new week opening gap low as well as a potential return back up here. Because remember, if for some reason, if we are insanely bullish and we said, hey, 3-month rejection block, you are not important. Well, we could see us treat this as an initial week's low and then have it continue up higher if S&P is also headed higher. So that's why looking at the two this week is going to be very important. While I do see the draw on liquidities down here, whether or not price is willing to be taken down there, I think that is going to be dependent on how we see price open up on Monday and how we see price trade on Monday and Tuesday. So from a daily perspective, though, we did see that this was a previous inversion fair value gap. These daily lines over here. So remember, we had this sell, we had us come up and close, or have us like trade up here. We had us close above this, and then we traded down. I think it was this would have been Monday. No, Tuesday. We traded down to that inversion fair value gap and rocketed off of that, right? So we consider this to be a balanced price range. Now, what does this mean if we get down there? Well, there's probably some other things that we can refer to. So, for example, on the daily chart, we see that here we have this remaining portion. Typically, when I create a fair value gap, it would be from this candle's low to this candle's high. But what remains now, since we've traded down there, this is the segment which remains out of that fair value gap. So I'm treating that as that low of 15797.75. We're going to treat that as a potential draw on liquidity, because what does that mean then? That means there's a daily draw on liquidity within a weekly draw on liquidity as well. I personally believe December is highly manipulated. We're going to create new highs after a small retracement this week. Yeah, it's very possible. And Altre, that's a really good point too, because seasonality comes into play too for December, right? November and December are typically bullish months. So we have to take that into consideration, that over the course of 10, 20, 30, 40, 50 years worth of data, November and December have proven to be more bullish months than bearish. Now, if we see a very bearish December, that is going to bode very well for our market maker sell model consideration here. But I agree, Altre, very much could be right. Very much could be right, where we have, consumer spending skyrocketing because Christmas time, lots of things going on there. So let's see how December plays out. There's still a whole month. We still have a few more days of November to see what kind of consolidation we get here. The longer we spend in consolidation here, the higher chance I think that we will see a big shift in one way or the other. I would like to think this is the top, but we don't want to choose the top, right? We want to see the market structure shift below here before we can say, hey, that's what we want, So with the daily, I do believe that this is a draw here, but I am thinking that midway point of the weekly fair value gap is the key. I think if we close below there, then we'll probably head downwards to this previous one down here. So that's what I think on the daily. We could, considering that this was a previous daily fair value gap, what I might do is I might draw this one out to Monday. I want to see how we react at that level. Same with this one. I'll draw this out to Monday. Monday, 5 o'clock p.m. because I use the close of the day. And we'll draw this out to Monday as well. So the reason why I want to do that, because what happens if we trade down to this inversion fair value gap and bounce off of it again? That's what I'm looking for. Monday or Tuesday, if we stay in this range and just bounce off of here, then that would be my signal that, hey, we're not willing to go further. We're not willing to go any further. Or if we only make it down to this short-term low, barely take it, and then head higher, that could be another scenario that I see. But for the time being, we'll stick with this at being our initial draw on liquidity there, okay? So let's go down to a hourly chart and see what happens next. So that's what we think on the daily is going to be our draw. So let's go down to an hourly chart now. Okay, so we are looking at an hourly chart. So for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days worth of price action. So what do we see here? Well, we see that we took a buy side liquidity out. We are seeing very soon that we're about to take a short-term low. We've taken a short-term low here out, but we haven't taken that daily short-term low down here yet. So this is the one that's really key, right? So let's see what happens if we try to kind of like take this short-term low, maybe head down and take these two out as well. Then that would be fine. If it continues downwards to take out this short-term low, which is at an old new week opening gap high, that's fine too. 212 reversal on weekly NQ chart. Oh, haha. We got a strat trader here. Awesome. Yeah, that's a bunch of my friends love the strat too. God bless the John. I think he passed away earlier this year, but yeah, very, very good concept for folks to frame. I remember studying that as well. I, of course, am an ICT trader. We see that a line that is too clean. Yes, you see that line. This line is what we're talking about. This low, 15,970, 15,9. Oh, where is it? Here we go. 15,9. Wait, this is 15,942.75 low. This is 15,942.50 low. So chances are that's going to get taken before we wake up tomorrow morning, but we'll see. We're seeing the market structure shift on the hourly time frame. And what does that mean? Well, we are in a bit of, we see this kind of turn into a balanced price range. We see it consolidated here, traded down. So what do we see now? Well, on the hourly time frame, I definitely see that we could have this be our buy side or sell side in sell side imbalance. Let me put this as a SIBI. So the hourly SIBI, we are drawing that all the way up to this top of the volume imbalance here. And we'll mark this to 5 o'clock p.m. Actually, I need to make this at 5. o'clock p.m. And let's draw that out to Monday. Okay, so, oops, did I put the wrong date there? No, that's right. Okay, we're still good there. All right, so we have that all the way out because we think, hey, if we take this area of liquidity out, right, where could the next optimal trade entry be? Well, we see this short-term high. This is a swing high as well, right? And we see this as a swing low. So assuming we don't go any lower, we can see that this hourly fair value gap is well within the optimal trade entry. And what else is here? We have a bearish order block here, right? We've seen this short-term low get taken out, displaced, taken out again. And then this bearish order block was respected. We headed downwards and we haven't traded back up into this bearish order block yet. So I think that tomorrow we'll probably see us trade back up to here if we get a chance to. I imagine we'll end up taking out these two short-term lows, these relative equal lows here. And of course, what's below that? Well, these we can also treat as relative equal lows as well, right? So this low is 15,912, even number. So we're going to keep that on our charts as well and mark that as a relative equal low price target. And let me remove this optimal trade entry Fibonacci. So this is what I'm thinking. This is what I'm thinking here. So we in probably Asia and London, we could see us continue lower here, maybe to around this area or maybe this short-term low here. I would anticipate us bouncing off of this new week opening gap at the very least if we get down there. So let's see what happens though. Let's see what happens in Asia and London to help us identify, hey, are we looking extremely heavy or are we just going to consolidate in this range which we've created now as we've reached a very, very key higher time frame level. That, remember, that this big red line is a monthly rejection block, so we want to keep that in mind, right? So I think with this kind of helps frame our movement down below. I'm gonna have to see if I might have to move the hourly charts a little bit. I didn't move these a little bit closer now. So let's move this here. Move this here so we can refer back to those weekly levels. Okay. And we have this inversion fair value gap. We'll move this out here too. We'll see if we trade to that and through it, basically, is what we're looking for. There are some fair value gaps that we haven't like closed below. So this here, we could see this trade to and through. What we would want to see if we see bearishness eventually is we would like to see this traded through and treated as an inversion fair value gap, because we've only seen price deliver to the upside, close, and then we want to see if we see a big black candle through here and then lower. We would like to see us potentially even treat this as an inversion fair value gap, right? I wonder if we would bounce off of this area here once we take lows, take this area out, head lower, treat this as a inversion fair value gap, head even lower. That's what I'm curious to see what will happen this week. So above us, we saw that last week there were short-term highs that kept on not being taken after this one was taken, right? So now that this is done, we can move this to here. Now that we have our short-term high target, this is a 16173.25. And we can mention this is our buy side liquidity now. Short-term high, rather. well, we won't refer to that in a while. We're not going to refer to that for quite some time until we see evidence that we've taken out a short-term low here, or rather taken sell stops and then are heading higher. But I think that we'll still maintain consolidation for a bit. We just consolidated here. We broke out, consolidated here, starting to break back down. So we'll see what happens in Asia and London, but we are heading towards this new week, previous new week opening gap. So I don't want to keep using this bullish order block because I do think we're gonna end up heading below that. So I'm gonna remove that for the time being. And let's see what else we got here. Those are basically, I mean, that basically, this is also a very huge area of liquidity that we need to head down and take out too. So all of these confluence together to lead me to believe that we need a retrace down here first. I would be curious to see if we make it below this low and we close below here, then I would venture to say that we have a bit more room to go, but we'll get there when we get there, right? So that's really all I'm looking for on the hourly time frame. Let's see what that frames out to be on the 15-minute now. Okay, so this is the 15-minute chart. We can kind of see the same areas of draws on liquidity here from today's price action from open. We see that we dropped precipitously. We came back up into this area of liquidity, previous low, and now we've continued to sell off from there. So if we return up, this can serve as a bearish order block. Remember, this is our hourly fair value gap, so we might see this 15-minute bearish order block not be respected. And we can see these relative equal lows a lot clearer over here. These relative equal lows a lot clearer over here. And we will treat those as sell-side liquidity. We have these daily inversion fair value gap as well, which we marked out on the daily chart. So we know that that's a point of reference that is important. And of course, this weekly level, we know this is the weekly premium draw on liquidity all the way down here. We have to see how it trades through this new week opening gap though. Outside of that, we see that huge drop down below here that we'll target once we get down there. But that all depends on if the algo wants us to head down there, right? We could just as easily see us squeeze shorts even further and continue the squeeze. If so, then we would chart to this. But our core gun to the head movement, we believe, is going to be down to aim for this weekly imbalance. So that is really it on today's prep for Monday. That's going to be our weekly draw. If we hit that weekly draw, we'll find where the next one ends up being when we get there. But for the time being, hopefully this chart's looked a little cleaner now. Hopefully the price action can be a little clearer on the lower time frame. And let's take a look down at the 1 minute chart to see if we can see anything. Just because I love looking at this. So what do we see here? We see a precipitous drop into open. We see continuation to the downside. We see a draw to here. And we also see that we have come down and displaced this quite well. So what would we expect this to be treated as? Well, I would consider that to be treated as a mitigation block. And lo and behold, as price returns back up to here, it takes out a short-term high here, takes out previous fair value gap here, as well as a mitigation block here, instantly rejects and heads lower. So now we're in consolidation. We're in a time frame of day that I don't really trade. I don't trade Asia as much. So kudos for those that did trade Asia. I hope you made some bank. And yeah, I think we'll aim to. We want to see a bit of movement higher. I mean, if we don't see any movement higher when it comes to New York or London, I would be surprised. But I mean, it is quite heavy. We haven't made any higher highs lately on the lower time frames, so we can see that. And so I'm wondering if we consolidate, head up through London, maybe take this short-term high out here and this short-term high out here. Maybe we head up that way. I would like for us to head back up to this hourly imbalance, so that would be great because it's lining up with none other than this buy side imbalance, sell side inefficiency that we want to see treated as an inversion fair value gap, right? So with this, we draw this out over 5 o'clock p.m. We see that that lines up very well with our inversion fair value gap here. Or sorry, our hourly fair value gap, our hourly sell side imbalance here. So, yeah. So I think that that's really what we're looking for today. There's nothing really else to do until we see what London does and see what Asia ends, where Asia ends. I'm thinking that if my bias is correct, then any price above this midnight close, whatever price is at midnight, any price above here that's a premium, I think is fair game to take a low risk short on. So that's what I'll be looking for tomorrow. And yeah, I might play, as I'm waiting, I might play some other things to the upside, but the larger moves I do believe are currently to the downside. So that's what we'll be trading tomorrow. And of course, during tomorrow's stream, I might be physically working, so it's not guaranteed I'll be able to live trade with everyone. So for those that are new here, I work 9 to 5, so I don't get a chance to live trade that frequently. But when I do, I'll let you know. Like when I take time off to trade and fully concentrate like I did on previous week, then I'll be able to. So I'll probably have this chart up so that we can have, you know, a higher time frame hourly perspective here, while we have some of the lower time frame charts here to be able to see a few different time frames as I record the price. And we'll keep the minute here just so that if anyone wants to refer to this in the future, we'll be able to as well. So okay, cool. So that's it for NASDAQ. Let's take a quick look. Actually, let's do one more thing before we leave NASDAQ. Let's move this as midway. Let's bring over ES as well. You want to take a look at both of these. And this is on a weekly, so let's go to a weekly. Okay, this will be a little bit easier to tell if I take out my drawing objects. So let me take these out for the short term. Okay, so what do we see on ES that we don't see on NASDAQ? Well, we see that NASDAQ already took out this short-term high. We have two short-term highs here, right? ES has not taken this out yet, so that leads me to believe that we still have some room to take this short-term high out because we call this a six-sister concept. If one has not taken it out yet, but the other has, then we want to see this taken out first before we head lower. I would kind of treat this as like a short-term high to take out buy stops and then head lower. It would be quite interesting to see if we took this short-term high out because then that would give E-mini the room to also take that out as well. But for the most part, these charts look pretty dang similar. On the ES, we don't have a major weekly. We have the same kind of major like weekly imbalance, which we created down here, but we also have this short-term high that we did not take out on ES. So that leads me to believe that we are probably going to at least take that short-term high out, and then we'll have to see if NASDAQ takes out this short-term high as well. NASDAQ's been the mover, so I think E-mini is going to catch up soon. So we'll keep an eye on E-mini this week, and as well as NASDAQ. Of course, we'll be trading NASDAQ as expected, micro NASDAQ. But yeah, So FYI, for those that want to save, I want to respect your time too. I physically am working on Tuesdays and Thursdays. I have to be physically in the office. So there is no chance that on Tuesdays and Thursdays I'll be able to trade with you here, unless I take the day off. I think I took Wednesday and Thursday off this week. I have to go back and check. But yeah, I'll let you know um, either on a YouTube post. I'll usually try to post something if I'm free the next day. On some of the reviews in the nighttime, I'll say if I'm going to be trading the next day too. But yeah, tomorrow I'll be physically working from home. So while I do have a lot of meetings, so it depends on if I have no meetings, then I'll trade. I'll try to find a trade during a break. If I have meetings, there's no chance. I'll just be recording price action, as this YouTube channel is made for, so that I can go review, you can go review how price action traded throughout the day. What were the 1 minute charts, 1 minute ticks looking like? What were the 5 minute, 10 minute, or 15 minute, hourly charts looking like? So that's the primary purpose of the channel. So we'll continue to do that, and we'll trade when we can. So I think that's it. Yeah, I think that's it for this week's market prep. You know where the bias is going to be. And yeah, any questions from the folks here? Any comments? Kirk, Altre, Z Arc Unlisted, appreciate you coming tonight. And as always, man, I don't know how to say it. Like, thank you very much for those that are subscribed. I mean, it's incredible. I think we just passed 700 subscribers when at the end of August we had no more than 20. So very blessed to be in this position, to have studied ICT deeply. Still more to go. I mean, I was looking through some of the Market Maker Forex series today and learned some more new stuff there too. So yeah, I think that this is going to be a fun journey, and I'm glad to be here and bring everyone along the way. So we really appreciate having you here. And if there's any questions at all, if the stream's over, just drop them in the comments. I usually will get to them, hopefully within a few hours if I'm awake. But yeah, just drop them in the comments. If there's anything that I could do better or you'd like me to do differently, let me know, and I'll try to see if I can do a video on that topic. But yeah, with that, it doesn't look like there's any other questions for tonight's prep. So hope everyone gets some good rest, drink a bunch of water, make sure you're well hydrated for tomorrow, get some sleep, and we will resume again tomorrow morning and close out the month of November. So we're very excited to see how this next month goes. And yeah, have a great evening, all. We'll catch up bright and early. Probably try to get on by, it's anywhere between 7 and 8 in the morning, but I'll try to start getting on before 7 because that's when New York opens, and there's definitely some trades to be had at 7 o'clock. So but yeah, that's what I'll aim for. Sometimes I might not make it till 8:30 just because I need to eat breakfast too. So yeah, that's what we'll aim for. And for those that are waking up early or trading London, good luck. I will be curious to see if London we get that trade up to where we want to, and see if we get everything to trade up before we trade down further. That's what I would be very curious for us to have. Okay, so all of my data is still back here. Oh, I do need to fix the opening range because this closed. Where did you close at? Where did you close at? So these pink lines that you see me moving up and down here, this is where I treat the real-time hour chart. So what am I looking at here? So this is the chart that's real-time hours. And I like to pay attention to this because this gives me a sense of where those big opening range gaps are. So this gives me a sense of, hey, where will liquidity draw towards, right? A lot of people don't pay attention to this. I implore you to try to, if you have this, I have it on a side screen. So that's how I refer to it. But, I'll have the opening, and I might keep this here because I don't know where price will open up at 9:30 a.m. tomorrow. I kind of just keep these here for the time being. And I'll move them once I get a sense of how 9:30 a.m. opens up. So That's what those pink lines are. And that is it for tonight. Shorter session, so I think that's it. I think that, looks like we barely stopped just above that short-term relative equal lows down there, 15,942.5. So we're going to break through that at some point. I mean, for sure we will. So if we don't, then maybe that brings us bullish. Maybe that's the catalyst we need. All right, team. That's it for today. We'll see you tomorrow morning. Get some rest. I will catch up with you tomorrow morning and see you soon. Take care.